Hi there, smart traders, and welcome to this weekly market review, where we are going to have a look at what happened in the week that has passed for us to better understand what we can expect from the week ahead. For those of you who don't know who I am, my name is Francois du Plessis. I am the Senior Analyst and Trading Specialist here at Smart Online Trader. I have been in the financial industry now for a little bit over 7 years, and I'm also a licensed FSCA financial advisor and trader. That being said, just before we do get into the session, kindly just familiarize yourself with the risk disclosure currently on your screen, bearing in mind that everything that I will be sharing with you during this video is purely my opinion of the market and should not be taken as financial advice. Starting things off, we are going to have a look at our economic calendar, and looking at our economic calendar for the past week, it was so short. We all kind of thought, well, this isn't much, 5 events, all kind of centralized around Thursday. Little expecting, well, if you knew what to look for, you were definitely expecting major, massive movement coming from that super anticipated inflation report that was due on Thursday. And as we can see here, our inflation report showed that inflation has been slowing down. It dropped from an expected 8% to a 7.7%, and our core CPI, so that's our core inflation, dropped from an expected 0.5 to a 0.3%. This easing or the slowing down of the inflation definitely raised hopes that the Federal Reserve will now start easing on the aggressiveness that they have shown in the last few months with regards to their interest rate hikes. And bets have now kind of been piling up in the sense of that 71.5% of the market is now kind of pricing in a 50 basis point jump that we can expect now in December, where just a week ago that was literally 50%. So we have already seen an increase in 21.5% of analysts believing that now that 50 basis point jump is becoming a lot more reasonable, where everyone was kind of on a 50-50 basis. Was it going to be a 50 basis points or a 75 basis point jump? But with inflation starting to slow down, we can now kind of see that the interest rate hikes are working and they are starting to take effect. And this has now raised hopes that the Federal Reserve will start slowing on those rate hikes from of December. That being said, let's have a look at how that affected the market and what we can now expect for the week going forward. So starting things off, this is our dollar index. And as you can see, after that, the dollar has really pulled back and lost a bit of value. In total, the dollar dropped by a total of 4% based on everything that has happened. And now we can see that we are approaching this major support level here at 105. So during this week, we can definitely have a look at what will happen once we actually get there. If it breaks, is the sell-off going to continue, or will that be respected so we can see a short-term pullback maybe to this 108.5 level, and then we can approach the market from there. The USD ZAR also had a fantastic week. Well, for the ZAR, not really for the USD, as we did see a major decline in this specific asset as well. So this instrument dropped by a total of 4.2%. And here we can see that the USD ZAR actually broke this channel that we have been in for so long. So now having a look, if this support zone that we have here that is ranging between that 17.1 to 17.2 Rand to the dollar, if that gets broken, then we can definitely see a further sell-off and a further strengthening of the South African Rand down to this 16 Rand a dollar level. However, if that gets respected, there's a very big possibility that we can break back into our channel and see a little bit of buying momentum back up to that 17.8 Rand to the dollar level. as well as looking at our US indices. So this is US 30. US 30 had a massive week, and it gained a total of 4.3% for the week, and now approaching this 34,000 resistance level that we can see here. So super anticipation now building around this level. If this breaks, is the bull market then finally back? Are we out of that bear trend? Can we then expect longer term buying positions to enter into the market? Or is this just going to be a double top where we are going to see sell-offs down to this 33,000 level again, and then see how the market then reacts from there? So we'll just have to wait and see, but definitely great opportunities in the market on this specific instrument going into the next 5 days. Here we can also have a look at gold. Now, last week we spoke about this triangle formation that was forming, and I said that if it gets broken, we can definitely see additional buying power into this week. And as we can see, we opened above that triangle. We had a beautiful retest on it, and if you were looking for buying positions from Tuesday, you would have caught all this massive momentum all the way up to the 1,770 level. Sorry, not 17. So 1,770 level, which showed that gold actually had an increase of 5.3% during this week. So now for the week coming, either we are going to extend this bull run and look for those additional positions back up to this 1,810 level, or we might see a little bit of a pullback back down to this 1,720 level, from which we can then see to buy or adjust our positions from there onwards. Oil, on the other hand, didn't have such a great week. Yes, the dollar eased. Yes, oil became slightly more affordable. And this, in general terms, should have been great news for this specific instrument. However, it really wasn't, because of the fact that there is still major headwinds coming from crude oil's primary importer, which is China. They actually showed the largest increase in COVID-19 cases in the last 6 months during this specific week. That has obviously caused the Chinese government to clamp down on COVID restrictions, and this has raised concerns regarding the demand for this specific instrument and has caused a slight decline. After Thursday's US inflation report, we did see the market, gaining a little bit of optimism and increasing a little bit. However, it wasn't enough for crude oil to actually have a positive week, and crude oil actually closed the week 4% down. Now, as we can see here, crude oil is currently in a sideways market, so that is a ranging market. And now going into the week ahead, I would personally wait for crude to either break below our support here at $84 a barrel, or break our resistance here around this $94 a barrel before looking for any new positions on this specific instrument. Traders, I trust that you found this video super beneficial. If you haven't done so yet, kindly smash that like button and subscribe to our channel. And as always, may the force be with you. Cheers.